Hello and welcome to Ask for a Trend. I'm Josh Lipton. For the next half hour, we are breaking down the trends of today that'll move stocks tomorrow. There's a lot to keep track of, so we're focusing on what you need to know to get ahead of the curve. Here's some of the trends we're going to be diving into. On Wall Street, it's a rally Tuesday. Stocks rising while oil slid. At the end of the session, all major indices ended the day higher. And will Nvidia remain the AI darling it's become? We may soon get more details inside the chip powerhouse. Stay with us for an in-depth look at what to expect from Nvidia's shareholder meeting tomorrow. And it's not just Nvidia. Tech is really seeing a boom, especially when it comes to capital infusions and investment. We're looking at some record tech inflows and what that means for portfolios and the future. Well, U.S. stocks closing higher with the Nasdaq Composite and the S&P 500 closing at their highest levels since February. Yahoo Finance's Josh Schaefer joins us now with the trading day takeaways. Josh.
Hey, Josh. Yeah, we really got our market direction today, kind of before the market opened, even going back to last night with President Trump discussing that there is an agreed upon ceasefire between Iran and Israel. Of course, some reports perhaps maybe disputing that we're not quite at the ceasefire point of that conflict. But in general, that gave us our market action. I know you've been looking a lot at oil, Josh. You've been waiting to talk oil with me. We were talking about it in the break. Well, you got crude futures down pretty significantly. Right now it's $65 a barrel. Remember, we were up at 77 sort of at the peak of this conflict. And you and I had been chatting about this. I'll take a look and go back to one of my graphics here. I mean, this has been kind of the story of the market, if you will, over the last couple of days. So this was yesterday, right? Oil falls. Look at what happened, your S&P 500. Then I flip over to simply today's action. Really kind of the same story. You can see oil just moving lower throughout the day. At the same time, the S&P 500 sort of just been following it in reverse and moving up.
And we talk about how it's a ceasefire over there, not a peace deal, Josh, which are two very different things. And so as investors, we're kind of waiting to see how this really does all play out. The key, as you talked about and reported on, was really, of course, for investors, they were focused on the Strait of Hormuz.
Right.
But that does remain open, that passage.
Right.
The oil is flowing.
And so I think that's crucial, right? So we're talking about how this ceasefire, it's a little bit unclear exactly where we are in that process, right? But when you look at, so what we're looking at here, this is Polymarket, a popular online betting platform that strategists will often reference. The bet was, will Iran close the Strait of Hormuz, right? This would cause economic ripple effects, maybe push up the price of oil. Well, at the peak of the market fear, got up to about 50%, right? People were feeling like this was a real likelihood. Look at what's been happening over the last 48 hours. We're down to about 3%. And so I think that speaks to maybe the conflict itself is not resolved, of course. I don't know if conflicts over there ever resolve that quickly, right? But the peak economic risk at least appears to be removed for now, and I think that's what the market's cheering at this point.
All right, Schaefer book number 2.
Josh, we're back to talking about all-time highs, man. I'm looking at February 19th a lot on my screen to figure out when we're going to get that S&P 500 all-time high. So there was 6,144. Narrowly missed it today, but we'll have our eyes on that. But if I can find the Nasdaq 100, I went back and checked at the close. We weren't quite sure. We did get a Nasdaq 100 all-time record close today. So it's been a pretty big tech-driven rally. Not necessarily just Mag 7, though, but it's been tech for sure. And
what about under the hood, Josh? Take us there.
Yeah, well, let's get into it, because we were talking about this at the close, right? And it's been interesting. So when you look inside the Nasdaq 100, whenever you and I go to this screen, our eyes usually go here, right? But if I flip to a 10-day, you've seen some solid things in the Magnificent Seven, but not clear outperformance there, right? I'd look at a Broadcom up 8%. I think that one's interesting. If I equal weight it out for you, I think you see two key trends. You see some AI plays in terms of Palantir, right? Up 8% over the last 10 days. You look at Micron, Intel, Marvell, again, AMD. That's an AI sort of chip trade. One other thing I want to leave you with here, Josh, that I was looking at while we were in the break that I just find interesting. When we talk about sort of this risk-on rally, one headwind that's kind of quietly been removing itself in the distance here, let's look at a 2-month of the 10-year T-note. That's at essentially its highest level since early May. Remember, we talked a lot about you get up around 4 or 5, maybe you get a little bit of risk off. That is another market headwind that has sort of been helping as maybe it's rate cut hopes, maybe it's inflation fears coming down. But whatever it's been, you've seen rates coming lower over the last couple of days.
All right. Thank you, Joshua. Appreciate it. Stick around. Much more Ask for a Trend still to come. Tech continues to climb with the XLK now trading at record highs here. In a recent note, Bank of America analysts highlighting that tech inflows last week hit their highest level since June 2024. For more on this, let's welcome in here Alec and Al here on Yahoo Finance.
Yeah, Josh, markets closing in a sea of green today with those gains concentrated in the tech sector. So let's start there because we just hit a new record for the Nasdaq 100. Now, this includes those mega cap names like Nvidia, Microsoft, Apple, Tesla, and it does mark the first time since we've climbed back to record territory since February. So you can see February 19th, we hit those highs, saw a lot of choppiness throughout the spring, and now we are back to those levels. And think about what's happened between these two highs. Trump's Liberation Day, renewed tariff uncertainty, escalating conflict in the Middle East. I mean, investors have weathered a lot of uncertainty, and yet stocks just keep pushing higher. And there are some Wall Street strategists who say we still have more room to run. Earlier today, we saw Brian Belsky from BMO Capital Markets. He upped his S&P 500 target back to 6,700 by year end. And to that point, the S&P 500 just striking distance off of its own record high. And here's another sign of that continued momentum, particularly within tech. New data from Bank of America shows clients were net buyers of U.S. stocks for the second week in a row, pumping in $4.4 billion into U.S. equities last week. That included big inflows into tech names along with energy ETFs. And then you zoom in here on sector performance since the close on June 12th. Now, caveat here, this does not include the gains that we saw from today's close, but tech once again leading the pack here, followed by energy and industrials. And then on the flip side, defense sectors like healthcare, they actually have come under pressure recently. And that's notable because during periods of heightened volatility, you typically expect a flight to safety, but this time around, that defensive rally, it never showed up here. So strategists who I've been speaking with say long-term investors should really stay focused on those quality names. And as long as treasury yields remain contained, which they have, oil prices also important that they stay under about $85 a barrel, the market is likely to stay focused on those fundamentals here. So that's earnings growth, that's economic data. We'll have PCE inflation data out on Friday. And then whatever the Fed decides to do, we heard testimony from Jerome Powell earlier today. He is keen on keeping rates where they are. But if we continue to see positive data, we have Jackson Hole coming up in August. Those Fed cuts, which the market is currently projecting, will start in September. Just another catalyst there to bring stocks even higher. Josh?
All right, thank you, Allie. Well, Nvidia reaching a new record close as chip stocks rally. The move higher comes as the chip maker gears up for its shareholder meeting. Chris, now usually shareholder meeting, you know,
kind of humdrum, right?
You know, expect a lot of fireworks. You got executive comp that gets rubber stamped. You know, reelect the board. Maybe a shareholder proposes something the board hates and it goes down in flames. But tomorrow, you say actually.
Well, I think we could see something, right? Because typically companies tend to give an overview of how business is going, right? They might comment on some recent developments, and this is Jensen Huang after all. And he does spin a pretty good yarn, Josh. And to the extent that he says anything incrementally positive, whether it's reaffirming expectations that Wall Street has, talks about inference, which was a comment we talked about earlier about AMD and the huge push that that's going to have. Maybe he says something about how Blackwell is doing. Or what I'd like to hear is, hey, margins in the back half of the year, they are going to ramp as we mature in our Blackwell production. It could be anything, could be nothing, but we have to pay attention.
You own Nvidia in this portfolio.
The Street Pro portfolio, absolutely.
After the run it's enjoyed, Chris, are you just kind of sitting tight here? Are you adding? You booking a little profit?
Well, so typically we have a very hard rule with the Pro portfolio. If a position eclipses 4.5%, we will start to trim it back. Now, the Nvidia position, even though it's been very strong and we own a decent size in the portfolio, it hasn't hit that point yet. So we are watching it. So some of the data points that I'm watching that could potentially tip us into that area, well, as we move into from June to July, we could get some Taiwan Semiconductor monthly revenue numbers, their quarterly results. Same for Foxconn. Those are nice leading indicators. But we're also going to be watching big tech and what they have to say about capital spending levels for the second half of the year. Did they say anything early? Maybe not formal numbers, but tip their hand a little bit for what capital spending could be in 2026. If we see that happening and it's positive, that really could lift Nvidia further.
What about the yellow flag I will hear some folks throw, which is, what if Nvidia can't sell? What if Jensen can't sell his latest and greatest AI chips to Beijing? Then what?
I think a lot of that's been kind of baked in. That's not a new conversation. I would actually flip it around and say, What about what we're seeing for AI and data center growth outside the US? You know, and I joked earlier we were off camera, you know, they're building data centers in Armenia. You know, you can see whether it's, you know, the European version of Stargate or other countries, there is ramping data center demand. And I think that with Blackwell being sold out, you know, there is room for some upside as these other projects are announced.
We were talking earlier in the show about, so Nvidia in the portfolio, and we heard CFRA, Angelo, friend of the show, he goes to a strong buy on AMD and Lisa Su. Is that in the portfolio?
No.
And why not, Chris?
Because, you know, again, we only have so many positions that we can hold, so we have to be carefully weighing what positions in tech do we have. I will tell you that in the Pro portfolio, do we have Nvidia? Yes, we do. Do we have Marvell? I talked about that earlier. Do we have Qualcomm? We do, because of that play on AI PCs and the industry shift toward that, but also its larger diversification into IoT and some other end markets.
Chris, it has been a pleasure hanging with you all afternoon today on the show. Any final thoughts to leave the viewers with?
I would just say that there's, you know, a couple things you got to pay close attention to. The market has run very far, very fast. We of course like that, but we have to be mindful of what could trip us up from here. So we talked a lot about data coming up next week. Remember, right around the corner, we've got the June quarter earnings season. Be very careful. Be mindful of guidance for the second half of the year. We've seen consensus expectations for the S&P 500 come down, right? Second half of the year back in March was supposed to grow 12, almost 13%. Now that's down to about 8.5%. My concern, tariff uncertainty, trade deal uncertainty, companies skew guidance. You heard me say this before. That could take that 8.5% for the back half of the year down a little bit lower. If that happens, people start to question, oh, what's the PE for the market? So we might see a little summer sell-off potentially on what the guidance is, but perhaps that's a buying opportunity.
All right, be thankful for the run, be alert for what comes next.
I like the way you sum that up.
Thank you, my friend. Always great to see you.
Same here.
Stick around. Much more Ask for a Trend still to come. It's a noisy backdrop for markets with geopolitical conflict, trade tensions, tariffs, but according to Robinhood, there are trends emerging in retail trading like IPOs and big tech. For more, we're bringing in now Steve Quirk, Chief Brokerage Officer at Robinhood. Steve, always great to see you, especially on set.
Thank you. Thanks for having me.
Maybe start big picture, Steve. I always love talking to you because you have this great line of sight into the retail investor, right? And they have a lot going on. War and trade and tariffs and taxes and Fed, you name it. And yet, Steve, you see this relentless buying, right? Even amid the noise, the headline turmoil. Why is that, Steve? Walk me through it.
Last time I was here, I think it was right after the tariff announcements, and we talked about the same thing, that there was a lot of dip buying and conviction. And I mean, you just brought it up. Think of what they've had to navigate since then.
Right.
Now we have, you know, the skirmishes that are happening in the Middle East, geopolitical things, you know, whether it's the back and forth on tariffs, and even some of the bills that are being passed are, you know, driving some uncertainty about which sector they should invest in. But I think the one thing that's been kind of, if I had one word to say, is there's perseverance. And as my mom used to say, this too shall pass. And that's really what they're doing, is they're younger investors, and they're looking at a point in time somewhere down the horizon and saying, you know what, I know that there's going to be some volatility here, but I'm going to persist, and they've been rewarded for doing so. How
much of that, Steve, since you mentioned that, how much is it the demographics of it, the age of your typical Robinhood investor?
I actually think it's really funny because it's kind of counterintuitive. Like, you would think people who have navigated, you know, these kind of geopolitical situations previously would probably have a little bit more of a stomach to do so, which makes sense, right? You've seen it before, you know what happens. There's, you know, somewhere there's going to be a rainbow on the other end of this thing. But the flip side of that is those people are in their 50s or 50, you know, later, and they're closer to retirement. Now, if I'm in my 20s or 30s, I have a very long investing horizon, and they've all understood and done their homework, and they know average returns over a very long period of time and what happens. So I think it gives them an advantage because they can be wrong for a period of time and still persist. And so that's been really beneficial for customers to just understand that.
And when they are buying, when they want to buy, Steve, what are they buying?
They buy the names that are very popular, but the other fascinating thing about them is they're kind of like personal money managers. So like the current sales are the names that have appreciated the most, like the Nvidias, the Teslas, the Amazons, and then they kind of rotate into things like United Health that have gotten beaten up. And so they almost act like personal money managers within this portfolio, even though that portfolio is much smaller than what a money manager would have.
What about ETFs? They buying those products?
They do buy ETFs, but they tend to buy ETFs, like a percentage of ETFs versus individual stocks goes up a lot more when the market is going down. And I think we talked about this the last time. There's more of a conviction around the market going higher than any individual name. I think the one other fascinating part of this is when they're doing some of this buying, because
Talk about that. I was interested to get your take on that. About day, night. What are you seeing?
They don't matter. It doesn't matter to them. Like 60 to 70% of them are doing their homework and coming up with their investment theses when the market's not open. But if you look at the news, like when things happen, like Sunday, the market looked like it was down, and it was down, and Monday we're off to the races again. So we've seen huge volumes in the overnight session, and we have a bunch of products that they can trade. So you can trade 1,000 individual equities and ETFs. You can trade futures, and we had a big spike in gold futures over the course of the last month and a half. And now that rotated into oil futures, of course.
Trading crude, I wanted to talk to you about that. Obviously, the spike, then the tumble, what are you seeing there?
Well, it normally would constitute about 3% of our overall futures trading. It popped up to like 15%.
Interesting.
Which is a big jump. And they're just capitalizing on the volatility and the uncertainty and taking advantage of that.
What about crypto?
Crypto, crypto was it spiked in volume, and of course we had a lot of price action there, so which draws a lot of people in, and we saw volumes pop there as well.
Any themes or trends to point out when it comes to margin balances that you're seeing?
No, the margin balances have been pretty steady. So I mean, we don't really want to see people get overextended, and we don't see that. It's just been pretty steady, which is good, and customers have generally been doing quite well, which, of course, we all want that for everybody in the industry.
Steady buying the dips. Steve, great to see you, especially on set. Thank you, sir.
Thank you.
Time now for what to watch Wednesday, June 25th. We're going to start off on the Middle East. We're going to be keeping a close eye on developments between Iran and Israel. President Trump speaking directly at both countries on Tuesday in his Truth Social post, urging them to honor a ceasefire agreement between the two. Taking a look at earnings, we're going to be getting some more reports throughout the day. That's from General Mills, Winnebago, and Micron. Micron will be announcing results for the third quarter after the markets close. Analysts expecting the chip maker to post better than expected results, driven by strong demand for its memory chips and pricing power due to limited supply growth. And speaking of chips, Nvidia holding its annual shareholder meeting in the morning. Investors looking to see if the meeting becomes the next catalyst for that AI juggernaut. Finally, new home sales data for May is coming out in the morning as well. Economists forecasting that number to drop compared to April to 694,000 on an annualized rate, signaling cooler demand amid elevated mortgage rates. That's a wrap on today's Ask for a Trend. Be sure to come back tomorrow at 4:30 p.m. Eastern for all of the latest market moving stories affecting your wallet. Have a great night.